The only other thing you got to know about is this indicators tab. This indicator is, these are different parts, different things that will help us better analyze what's going on. One of the things I'm going to look at is a couple of different things that I think we need to consider. Right? I told you a second ago that indicators are something that really help us better understand kind of what to do. So when I go into indicators, I've got a lot of different ones that I look at, but let me kind of find a different one here. Right? This right here happens to be, when you click on an indicator, it's going to show up right here. Okay, and when you see this eyeball, this is just allowing you to take it out if you don't want to see it, because a lot of times you can have a lot of different, really a whole bunch of different indicators on here. It kind of get kind of messy. But when I click on this gear icon, what it does is it allows me to come over here and find out what's going on. This happens to be a 200-day average in price, right? So what I'm going to do is I can click on this. I can change the color if I wanted to. If I wanted to make it, orange, I could change the thickness of the line. I happen to like this specific one to be a little bit thicker, so that I can see it. But basically, when we're talking about a time frame, really what we're looking at is kind of averages, right? Like, yes, the price went up and then it kind of fell down, but what does that really mean for me if I want to invest in it? Well, there's a general kind of trading concept that we'll get to, but this line's very important for the long term. So one of the interesting things about the 200-day moving average is it seems to be a very stable line for the market of Bitcoin specifically. As you see, this is back in 2017. It seemed to stay on top of this line, Then the price went really high. And then once it came below that, it kind of got bought back up a little bit and all this kind of stuff. But once it goes under the line, it kind of stays under the line for a little bit until it decides, oh, I'm going to pop back above the line. Once it's above the line, it'll kind of stay above the line, but it typically stays fairly close to it. And there's a lot more we could talk about, but this is kind of the basics. This orange line, it represents an average price over 200 days, right? So it kind of tells you really what's happening. If you take out the hype, you take out the highs and the lows, and you start looking at averages. So for this, what happens to be this second in time, what happens is we've just had this really big sell-off, right? And now we're under the line. And what happens when we're under the line, like I told you, it's going to stay under that, right? So it came down here, and then it went back up in price. Where did it stop in price before coming back down? Oh, look, the line. How about that? It's almost like it's this resistance that we have to bust through. And when we're talking about trading, the two words you're going to hear a lot is support and resistance, right? So right now we are under the line, and what ends up happening is that we hit this line as resistance. And so we come back down here, and it seems like we're going back up. If after a couple of days of trading it starts going back up, where do you think it's going to stop? Most likely, right? Probably at this line, at this $41,600, maybe $42,000 line, right? Something to consider. And so if you're really looking from a macro standpoint, meaning that I'm looking at daily time frames, I'm looking at weekly time frames, I just want to know if I put my money in and in several months or several years I'm going to be good. This is kind of gearing us towards a little bit better information, right? And so what we're looking for, if you're looking to say, I want to buy it low and I want it to go up a whole bunch before I sell it, great. Let me show you the easiest way to do that. Wait for, and this is going to sound crazy at first, but just go with me. Wait for the price to get to be about 43,000. But Brian, why would I ever buy something at 43,000 if I can buy it for 37,000 now? And that's a whole other conversation of risk. Right now, we don't know. It might come all the way back down here, right? Probably not, but it might come down a little bit. What I'm doing is by saying once I let it get above this 200-day moving average and I get maybe a candle or two here, but it's over here on top of the line, then at least I know that it's above the line and it's probably going to stay above the line. So if down here, we've come down and we come back up and it hits the line, and that's called resistance. When we get above the line, guess what happens? It goes up, but then it's going to come back down and it's going to test these lower price points, and it's going to come back to, after it breaks out up here, it'll come back down and it'll touch the red line or orange line. Sorry. That's what we call support. And really the easiest way to think about this is this is what's happening in price right now. We're under this 200-day line, right? And it could be any number, but specifically for this time frame, for what we're going to talk about to keep things really simple, a 200-day moving average is a very stable moving average that we can look at to kind of make some decisions on the long term. So what happens is trading is kind of like driving, okay? Imagine that the orange line is a brick wall and you're in your, I don't know, maybe you drive a Ford Bronco, like a 1997 Ford Bronco. So what you're going to do is you're going to rev that engine and you're going to speed as fast as you can wherever you are, and you're going to try to run into that wall that is the orange line. Okay, so we'll kind of do it on a vertical view. So you're in your truck, you take off, you hit that orange line, you hit that brick wall. Well, what happens when you hit that brick wall? Well, you definitely damaged the wall. You probably damaged your Bronco, right? But you definitely didn't bust through that wall, did you? And so you have to back up in order to go at it again, because you got to get through this. You need to get on the other side of this line, on the other side of this wall, right? So you've hit the wall, and now you're going to back off of it. So you started down here, you rammed the wall, you hit it right here. Now you got to back off a little bit. Now I'm going after this wall again, up and down until I get to the point where I hit this wall again. Well, now the wall is pretty damaged. I still have not gone through, but you can definitely see I've hit this wall more than once. And then a lot of times what ends up happening is I'm going to back out my third time, and then guess what happens? I'm going to really hit the gas this time. I don't care if I ruin this Bronco. I'm going to slam that pedal down. I'm going to really ram this wall. And that third time, what ends up happening a lot of times is we're going to break through this line, and the price is going to end up here. And once I'm above here, all I needed to do is turn around and come down and touch this line as support, saying, all right, we're good. I can't back through the wall anymore, right? I got to go find another wall to bust through because I'm in a Bronco, right? These things are like, they never fall apart. So this is kind of the concept of trading, and some of this seems a little bit much right now, but I feel like if I paint this story early on, it'll just continue to develop from here. So the other things that I'm really looking on the chart that you should really consider is from the indicator standpoint. There are a billion indicators, and I'll try to do a bunch of videos on different types of indicators, what they mean, why you would use them, why you should ignore some of them, that kind of stuff. But there's really complicated stuff. There's pretty interesting stuff. And so we'll kind of dig into that a little bit at a time. First things first, let's understand how to use our chart, how to be able to, kind of make it look the way we want to look, and go from there. So we'll get more into indicators as we go along. The other thing I want to talk about right now is you see all these vertical lines at the bottom? This is volume. Volume means how much information, how many trades, how much money is moving in and out of the market at a certain second. When you have a lot of volume like this giant red candle right here, right? They don't have to be, they could all be one color. It doesn't really matter. It just happens the settings right now are saved in a certain way. And if you wanted to change them, you can right click just like we did our color themes, but we could go down to settings, and in settings, we could be like, you know what? I don't want the body of my candle to be green. I want it to be blue because blue is cool. And I don't want it to be red. I want it to be yellow because that's just something I'm into. And you can even change the borders, right? You can change the color of the wicks. You can do pretty much anything you could imagine here, right? But basically, you're just going to go through here and see, hey, what are some things I might want to add here? I'm telling you, don't get bogged down in the weeds. Keep it pretty simple, and we'll go from there. So I'm going to go ahead and cancel this so it kind of goes all back to normal. But volume is an indicator that typically is automatically set when you open up your TradingView account. So if I want, I could just turn it off by hiding it so it stays there. Or if I'm like, no, I'm not really interested in learning about volume right now, I'm going to click out of it, and I'm just going to look at the indicators that I have available to me, right? And we'll talk about moving averages more. We'll talk about what's known as the MACD. We'll talk about what RSI is. All of these different indicators, if you Google them, you'll learn very fast what they are, but I'm also going to do a video on each of them. But while we're in this specific spot, before we go any farther, we've talked a little bit about what's happened on the top. Let me talk a little bit about what's happened on the left, because I've made a couple of terms like support and resistance that I really want to make sure are clear. So really the most important things you're going to be using is where it says arrows. You're going to use trend lines. We're going to talk about that. And then the other things that I probably use, I use text boxes a lot of time to be able to say, this is a word. I don't know. Just kind of something. If I'm going to take a picture of a chart and send it to somebody, oh, here's kind of an explanation of what that is, right? You really don't use that much. These are what are known as Fibonacci levels. We can get into that a little bit. The Fibonacci levels are a fascinating concept in themselves. It really helps you better understand the psychology of the market, but it's another step down the road. You saw me click on this and you see all kinds of icons. I can draw all over the place if I want, but let me show you the three that I probably use the most. This ruler, that's known as measure, the zoom in and the zoom out. Zoom out, guess what it does, folks? Zoom in, guess what it does, folks? Oh, look at that. I'm going to come in and I'm going to zoom in on a specific thing. So what am I wanting to know about the measuring tool? I simply click on it, and what I'm going to do is I'm going to use this to figure out my loss or my gain, right? And so I'm going to say, hey, look, the day ended right here, and let's say for whatever reason I decided to enter and say, I'm going to buy Bitcoin. It's $58,251. I'm going to buy it. I'm going to click one time, and then it brings up a little blue box. And without clicking anything else, I'm going to drag it all the way down to pretty much to the day that I sold it. I'm going to say, you know what? On this day, forget it. We're at 34,000. Oh my gosh, this thing's going to go to zero. I know nothing about crypto, and I've been wrong, and I better just pull all my money out before my spouse kills me, right? And so I click right where I exit. I clicked where I entered. I clicked where I exit, and look at that. I lost 40.55%, folks. That's a bad couple of days. Let me just tell you that. Now, here's the inverse of that, right? As you would imagine. Nobody likes to tell that story, but everybody loves to tell this story. Oh, man, I got in right here. I wrote it up to right here. 107%. Look how genius I am. I'm such a great trader, right? And this is the same guy who is excited about this is probably sadly the same guy who took this loss right here because you don't understand how to read charts. And guess what? By watching these videos, you're going to learn, and we're going to try to simplify a lot of this and really make it easy for you.